I've had enough with the news. This information that you need to see right here, there's no gatekeeping. I'm not bringing you information that is all fluff. You're going to get what you need to know. The very first thing is what's happening in the stock market today. We've gone into levels that we should not be at. We got to tread lightly. Second thing is about the economy, but I'm also going to give you where you should be putting your money. You as an investor, you as a business owner, these are the things you've got to pay attention to. I'm going to break this all down right here, right now. Let's begin. First things first, you can look at it, recessions reverse excesses. And so you'll see in this chart right here, it measures the cumulative change in the S&P 500 compared to corporate profits. We find that when investors pay more than $1 for $1 worth of profits, those excesses are reversed. This chart goes back all the way to 1955, and that is a fact. You can't get around this. Do you see this chart? I love this resource, Real Investment Advice. I interviewed Lance Roberts a little while back. This is some really good stuff. They're a very well balanced publication. So you can see it. $1 for $1. If you pay more for that, then ultimately things change. There is a reversion to the mean. People don't like to hear that, but that's what we get. Now, the profits could come up considerably, or we could have the markets trade sideways until that does happen because of inflation, or markets can come down a bit. And so this is where we are at right now. It's not just profits, of course, but look at what happens with calls. Calls are bets that the market will go up, all right? And so we have puts, which is the exact opposite, bets that the market will come down. But here you can see it for yourself. US call volume has exploded this year. And so usually the market is the exact opposite of what it should be. And so when everybody's piling into the calls, it's usually going to go the other direction. That doesn't mean it's a crash, that it's some sort of recession. No. What it means is that the trade is too crowded at this time. And so the smart investors start looking at that and they start putting positions that are going for the opposite direction. And it's the same in the other way. Everybody's saying, oh my goodness, it's the end of the world. I'm going to buy puts. I'm going to do this. And usually it ends up in the opposite direction. It doesn't happen overnight. It doesn't happen when you think it would happen, but that's what goes on. So we have these two factors right here, profits as well as the bets that are happening. Options are something that we can look at to be able to determine what's going on. Now, I want to talk about the economy. I think it's extremely important that we look at these factors on a global level. First things first, in the US, extending the job growth streak even as the economy cools. Employers added 187,000 workers in July. That's a slower pace from the recent norm, but more sustainable. That is true. In fact, coming out of 2020, obviously you're not going to see those numbers. But when you take out the seasonal adjustments, when you actually look at it, you got so many temporary employees, you've got people that are working 2, 3, 4 jobs. There's a lot of ways that this is skewed. Clearly, it's not where people want to be. But this is what's happening with the US. It is a very mixed bag. When you look at it, for instance, just in the manufacturing. Okay, there's supposedly all these factories going to be built, but how is industrial production right now? Actually, it's not very good. It's weakening. And the long-term sentiment here is that you don't really want to build inside the US because job growth keeps going up. I just heard today that because of the negotiations with UPS, the belief is that they're going to be, on average, the average UPS worker is going to make 6 figures a year. Fantastic for the UPS worker, but what does that do to the prices of shipping? Well, of course, it increases it. You're going to have to pay more to have that box shipped simply because you're paying the employees more. And that's the way it works. The customer pays. All right? Or you squeeze those profit margins. If you squeeze the profit margins down, the stock starts taking a hit and they lay people off. Do you see what happens here? There has to be a balance. That's why I'm bringing you all these details. Do you see where I'm going? This is so valuable, this information. If you do agree, hit that like button down below. Let's get into more. I've got it. It's huge. Big stuff, okay? Canada's economy sheds jobs. Oh, but wage growth stays high. And what they're saying here is that they're going to need to increase interest rates again. So Canada's real estate heavily reliant on interest rates to remain low, and yet it's been high for quite some time. So we'll see what happens and how long they can continue this for. So it's funny because they were talking about the European economy. Well, it's chugging along. It's doing kind of well. But if excluding France and Ireland, GDP growth would have only been 0.04% quarter over quarter, or 0 to 1 decimal place. If you go down a few, there's a quote, without Ireland, growth would have been halved. Looking through the most volatile components, we argue that the economy has remained broadly stagnant. Of course, inflation is way too high. Nobody wants to do business in Europe. Let's be honest. Who would want to do business in Europe? I tried to do a little bit of business in Europe. And in my personal experience with VAT, dealing with all of the red tape, oh my goodness. I mean, there is potential. I'm not saying there's not potential, but are you gonna, try to expand there? Really, are you? Or are you gonna try to expand in other places that are just much less regulation? It's more open. Growth potential is much higher. Oh, if I want to invest somewhere, do I want something that could be good? It's all right. I'm going based on historical context, or do I want something that looks real good over the next 2, 5, and 10 years? I mean, if you're going to build a business, if you're going to invest, you want to do that longer term. That's just the way I see it. Look at the state of poverty in Europe. Obviously, it varies depending on the area, but EU average 2020 is 21.6. This is the share of people at risk of poverty or social inclusion. This from the data comes from, of course, 2022, pulling last year's data, showing us that overall, Europe is really in a bad spot. Now, youth unemployment might be an issue in one place. You might have demographics issues like in Italy. I just spoke to a gentleman from Italy who lives in Canada saying, unfortunately, Italy not in a good space. All the young people are moving out. They're going to get jobs elsewhere. Aging population. Economy is just suffering considerably and will be for the foreseeable future. And so that's just one economy. So, I mean, how are they going to fix this? It's not easy, let me tell you. Germany's great economy sinking into slow session? I love that word, the slow session. But here we go, just another example. And what I want to highlight right now is, quite frankly, that all of this, it's just the news. It's just the news. It's just information. What are you going to do about it? Are you going to simply just say, you know what, I'm going to be complacent. I'm going to dollar cost average because that's what Graham Stephan said to do. Well, you can do that if you'd like. It's totally up to you. But if you actually want to be able to accelerate what you're doing, well, you just got to pay attention. In this video, I'll show you that, and then we're going to go into some other stuff after. You've got to be in the game. You've got to be aware of these things, okay? If you're investing in the stock market, but you're not looking at liquidity, what I call the money mirror method, if you're not into that, how are you ever going to learn about these things? I mean, it is just like doing it blindfolded, right? But the economy, business, but even as an investor, you want to know, right? If there is a recession, if we are in a slow growth kind of environment, where do I want to put my money? I'll show you. This is just talking about Japan, okay? Same situation. They've got a problem, fundamentally, demographics, all kinds of things. This is just showing us the public debt to GDP ratio. So all the countries, when you look at it, I think there is a big concern where they can't get their stuff in order. They're not going to get their stuff in order. We know that. And so over time, we are looking at more and more and more weakness, essentially, because the debt will considerably weigh them down. Look, economy after economy, you don't need to see all of this, but the point is, what we can notice is that the more debt, the initial growth is there, but you got to pay the price. You got to pay the price. And so, of course, people are not really understanding how devastating this is in the long term. So here we go. You want to know recession. You stated to this point here, recession, 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 or maybe it's just slower growth, right? Maybe that's all that it's going to be. It's the slow session. So I pulled this up for you guys. What categories are consumers avoiding during a recession? So here we go. What are people going to do? This is based on a survey, but you get the general trend here. Fun and impulse purchases. That's what they're going to cut first. Dining out, restaurants, bars, they're going to cut that. Holiday-related expenses, leisure travel, in-person entertainment, movies, concerts, and so on. Then it goes down. Streaming stuff like Netflix, subscriptions like meal kits and food delivery, personal care services, clothing, accessories, and so on. So I think you get the point here is that if somebody doesn't need it, if it's not a requirement, they're going to start cutting that out. The fun stuff, they can start cutting that out. Some would say, for instance, with cosmetics, there's been, the studies done before that maybe somebody can't go on a lavish vacation, but they might buy some cosmetics because for, I don't know how much it would cost, but let's say $10, $20 or whatever it is, they can make themselves feel good, at least for a little while. So there are some things to balance here. In this article, it basically just gets into more things. What products should you be selling? But think of it not just as a seller, not just in e-commerce or retail. Think of it like, just in the example of an investor, because these are companies that sell these products to people. Example, food and grocery. Maybe certain types of food and grocery are not required or what have you, but food, people need to eat, right? I mean, that's a matter of fact. Personal care items, of course, that's why Warren Buffett likes to invest in certain companies. Johnson & Johnson, maybe they look at, these staple kind of companies because they're providing all kinds of different products that people use in their household, toothpaste, and so on. They give an example here, okay? And so these are important stuff, right? Like these are searches through Amazon, but the point is people need these things. Household cleaning supplies and so on, okay? Pet care products, despite actually, you'd be surprised, pet care products did well during the last recession, during 2008, I should say. Clothing, depending. It really depends. As they say right here, men's t-shirts. So a man might buy t-shirts, but they may not, buy themselves a tuxedo, let's say, right? Baby products, of course. I certainly do believe that they will continue to buy these certain things, but maybe they go, instead of for the best top of the line, they look for a more value purchase. So that's where we're at. I hope that was valuable to you. Think of those things. I talk about it all the time. I give you that example 100 times of Tupperware. Tupperware is the type of product you do buy. You buy it during a recession. You buy it when times are good and everything in between. But the Tupperware you buy once, you save money over a long period of time. Now, Tupperware happened to become a meme stock, totally random. But anyway, maybe they were listening to the Money GPS. No, but this is important. Okay, so the things you invest in are need to be extremely resilient during tough times. So even if we don't head into a depression or recession, some sort of terrible event, if we experience slow growth, you still want to have your money in these places that will do well, that can take that margin squeeze when they have to pay their employees more and all these different things. And, I just want you to know that this isn't the only place. When you look around the YouTube videos, you can actually get a hold of me directly. This is all through Discord, and that allows us to communicate directly, as well as nearly 1,000 like-minded individuals who are there in the Discord every day. I want to see you in there, and I want you to say hi. Say hi, and I will be there to say hi right back. We can discuss anything you would like to. Go to the link in the description, hit that Discord, and I'll see you there.